Good afternoon and welcome to the annual general meeting of Albion Venture Capital Trust PLC. My name is Richard Glover, Chairman of the Board of Directors, and I'd like to introduce my board colleagues, John Carr and Richard Wilson, who've joined me here at Albion Capital's office in London, and our fellow director, Anne Beresford, who is also joining us online. You should be able to see all the board members on screen. Will Fraser-Allen, Managing Partner at Albion Capital, will be joining us shortly. The AGM is being streamed live over the internet to give shareholders the opportunity to take part in the proceedings. Given the uncertainty at the time we published notice of the AGM and the ongoing government measures in relation to social distancing, this meeting is convened with the minimum necessary attendees. The quorum for this AGM is 2 members entitled to vote in person or by proxy. This has been met, and I declare the meeting open. Now, at last year's AGM, a special resolution was passed to change the Articles of Association to allow for virtual and hybrid meetings to be held when necessary. This was to allow continued shareholder engagement when face-to-face meetings are not possible. And a positive impact of these virtual meetings has been that many more shareholders are actually participating in our AGMs this year than has historically been the case. We've adopted a slightly different approach to last year's AGM to allow shareholders to ask questions ahead of a Q&A session, which will follow the manager's presentation. May I ask that you use the Hopin chat function to send questions through to me now? And to do this, go to the right of your screen, click the Slido button, and you'll be able to type your question there. I would like to take this opportunity to thank shareholders who've already sent their questions through to the chairman email address. We'll be answering a selection of these questions during the Q&A session, and the board really does value engagement with shareholders, and I hope that at the end of the AGM, you'll give us any feedback you may have to this same email address. So, as is customary with all company AGMs, we'll start with a presentation from the manager. So, over to you, Will.
Richard, thank you very much indeed. So my plan now is to give the shareholders a presentation showing the results for the year that ended on 31st of March and talking through what has happened, a bit of thoughts about our investment strategy, and also we'll be looking at prospects going forward. And that, if we go to the agenda on the next slide, I will also pick up on what is becoming increasingly important to our investment process, which is how we incorporate ESG and responsible investing into our thinking and our actions. Next slide, please. So it was a good year, the year to 31st March 2021. We ended with a net asset value of 73p, but importantly, that was having delivered a return for the year of just over 10%, which is in pence 7.1p, which was great news. And as I'll come on to explain, a decent chunk of that was the sale of our care homes. We were able to pay tax-free dividends in line with our policy, which is around 5% of prevailing NAV. And in fact, we end up paying about 5.8% as an ordinary dividend. As a result of the significant cash balances that came from the sale of the care home, we have since distributed a special dividend of 15p, and that was paid recently on the 30th of July. Next slide, please. So COVID still continues, although I'm very pleased that the world is opening up. Many of us are back in the office today, and indeed we're seeing more face-to-face meetings in all parts of our business and our activities. We have been able to get a better understanding of how COVID's affected our portfolio, and where we've been exposed to particularly software and healthcare, we've been well insulated. And this company, despite its historic focused leisure, has actually weathered it well. And this is due to the renewable energy portfolio, largely pretty well completely unaffected, as well as having been able to sell out of a number of other leisure assets before the onset of the pandemic. And to pick up Richard's earlier point, in terms of shareholder engagement, we have engaged with far more shareholders than historically through virtual formats, of which this AGM is an example. Next slide, please. Looking at our track record, and you'll see that I've also included the numbers to June. That's because we have just announced our quarterly NAV a few moments ago, which showed a small uplift for the first quarter. But if you look at the longer track record, to both to March and June, 52% and 57%, that shows that we have delivered consistently over the last 10 years results in excess of that all-important target dividend of 5%, with the last 12 months being decently strong too. Next slide, please. So what has driven the performance in the year? What are the key highlights? In terms of fundraising, this company didn't raise money last year. Its cash had sufficient cash, and in anticipation of the care home exit, the board took the prudent view of not raising more cash than was required, and then that gave rise to these significant exits, of which the care homes were the largest part. So total proceeds of 32 million. And meanwhile, we've continued to invest similar amounts to the previous year, being 5 million. We've continued to buy back shares at a similar level, and dividends are slightly lower, reflecting the move to this variable 5% yield as opposed to a fixed dividend previously paid. Lots of cash, and I'll come on to that, but that cash has come down since the year end as a result of us paying out that 15p special dividend. Next slide, please. The underlying drivers of return: care homes, 4 million in the year. The overall return was somewhat higher, but that was the impact in these results. But we also had other exits, particularly Clear Review, which gave rise to a 0.4 million uplift. The Evewell, which is our women's health clinic in Harley Street, has bounced back very strongly post the early close down of the pandemic, and is now trading very strongly. Phrasey, similarly, this is our digital marketing business that looks at computer-generated marketing content, particularly for email campaigns. And unsurprisingly, that has seen a very positive COVID impact as there's been a mass move to digital marketing for many businesses. On the other side of life, our hotel at Stansted, unsurprisingly, has had a very tough time. Travel restrictions have rendered a very low passenger numbers through Stansted, so we have had to write that down to a very low number. The only positive thing I can report today is that the hotel will be acting as a quarantine hotel, which will give it some much needed income. But at the moment, we are holding it at negligible value in the balance sheet. And then beyond that, and as detailed on page 25 and 26 of the annual report, there have been a number of write-ups and write-downs, giving an overall return of 6.5 million. Next slide, please. Just to remind everybody of the portfolio, and the portfolio is heavily skewed by the proceeds from the care homes. And to remind shareholders, those care homes completed shortly before the year end. So cash at the year end was particularly high, at some 61%. That's come down to more like 40% following the recent special dividend. But if we, for the purposes of this, exclude cash from the overall portfolio, what you'll see here is a growing exposure to where the focus of this fund is going forward, particularly software and healthcare, but also shows that renewable energy at some 35% is a significant chunk of the portfolio, as well as our schools, which is covered by education. In terms of the whole portfolio, we've got 35 companies, and they are employing some 1,200 people, and those are mostly in the UK. Next slide, please. If we dig into our portfolio a bit further, and this is how we measure where the portfolio is in terms of stage. So what exposure have we got to early stage businesses as opposed to more mature and therefore less volatile businesses. We look at this in terms of revenues, and we look at this in terms of employee numbers. Now, this company changed its investment strategy to invest in technology, and particularly software and healthcare, relatively recently, and therefore does have a relatively less mature portfolio than perhaps some of the other Albion VCTs. But that will change in time, and it's very much in line with the strategy that over time we grow the other areas of the portfolio. So as you can see, the early stage is measured by revenues less than $1 million is about a quarter of the invested portfolio. Of course, over and above that, you have significant cash. But we still have a quarter where turnover is over 5 million, and then the balance between that 1 to 5 million. So there's still a reasonable spread across stage, albeit at this stage a little higher than perhaps some of the other VCTs, but arguably balanced by a 35% exposure to renewables. Next slide, please. Looking at a few of the new investments, Solidatus was very much in our sort of target area of data and data analytics. And Solidatus helps very large institutions, particularly banks, control their data on a global basis. So a large global bank is having to meet the equivalent of our GDPR, so data regulation, and they have to do it across multiple jurisdictions, ensuring that they both are able to adequately capitalize on the data whilst meeting regulatory requirements. And this is a software platform that does that. So the Albion VCTs invested 7 million, of which this fund invested 1.3 million. Next slide, please. Selden, again, a software business helping companies manage their machine learning models. So machine learning has become fundamental to so many areas, particularly in areas of automation and data analytics. And this platform helps with the training and management of the underlying machine learning models. Normally hugely time consuming, very intensive on highly paid data scientists. And this drives cost savings and efficiency in ensuring that they're better able to manage those critical models. So again, this fund invested 0.9 million of a 2.8 million Albion overall investment. Next slide, please. WeGift, very much to the theme of digitalization, this time in the area of digital rewards. Think of the old gift cards, your Argus gift cards or the like, which are now rapidly, still very offline, but rapidly moving online. And this is a platform which allows companies to access digital rewards, i.e. these gift cards, on a digital platform. So that might be to provide rewards to employees, but also very much in terms of providing marketing incentives. So, for example, a financial services company offering a voucher for signing up to a new ISA. Very big market, multi-billion pound market. In fact, one of the surprises to us when we were looking into this is just how large and relatively how undigital this market was. Hence, this platform, which can give access to so many gift card brands, feels like an exciting place to be. Our investment in this fund, 0.7 million of a 4 million contribution from Albion. Next slide, please. A couple of very brief ones. It's our smaller. Transfect fits into our fintech portfolio, and that is helping banks connect to trading venues. So this might be for the trading of fixed income assets. So it's effectively controlling the API links, which is the interconnectivity between banks and those venues, those trading platforms such as TradeWeb, where fixed income assets are bought and sold. UMed, this fits squarely into our digital health strategy, and this is a platform that allows particularly life science organizations to recruit participants in clinical trials by accessing in a very data compliant way underlying patient records to identify potential suitable candidates for a clinical trial. Next slide, please. So the big sale, the care homes was exited in the early March this year. They've been a fantastic investment for us since we've been invested, and they were sold. There were 3 of them, and they were sold to Corian, which is a French-based and very large European care provider. We've invested 15 million across the 3. When you add in all the returns, so the proceeds and interest received to date, we delivered a 2.4 times multiple, and that was an IRR of 20%. So for a freehold asset-based investment, a really excellent result. And this fund, through its exposure, particular exposure to these care homes, has delivered very decent returns from the experience. Next slide, please. Other exits, G Networks was our broadband provider, so they were putting a broadband infrastructure into central London. That investment's done very well. In fact, by the time we sold, they had now passed some 160,000 potential premises. The investment was 4.68 million. That was across the Albion funds, and then we delivered a 31% per annum return on that, which was excellent. The only unusual feature of this thing is the proceeds that will be received after 3 years and in 2 and a bit years' time. But when we look at the counterparty risk on that, we sold to funds that were controlled by the USS University Superannuation Scheme and Cube Infrastructure. Next slide, please. And then the final exit was a very short hold. So Clear Review was a software used by HR departments to allow for continuous appraisal. We invested 0.4 million in this fund, and in a very short period of time, so effectively 15 months, we delivered a 2.1 times return, or a very high IRR because of the short hold period of 73%. It's relatively small investment, £420,000 proceeds, and unusual that it was a relatively short holding period. But the opportunity came to sell to Advanced Computer Software, who were looking to add it to their suite of software products. Next slide, please. The significant cash generated from particularly the care homes gave rise to the board undertaking a strategic review, and specifically they were looking at what options were available to this fund and how the cash should be used. And the conclusion of that strategic review was to pay a 15p special dividend, which is now in the hands of shareholders. And then the view, because the fund will be smaller as a result, is that we will look to build the net asset of the fund over time through both investment performance and raising new funds, and importantly, maintaining the dividend policy, which is to target that 5% of NAV. Next slide, please. Investment strategy for new investments remains very, very much as I reported last year. It's from early stage seed through to more mature businesses. We call them Series B, so might typically have up to about 200 employees. But importantly, looking to back enterprise software, so in digital security, digital marketing, data analytics, and fintech, as I've shown in the examples. Healthcare technologies are still very important, both in software, but also an element of specialist pharma and diagnostics. And then looking at other key themes in technology, whether that's automation, whether that's more efficient use of sensors, but also looking at how businesses can make themselves more efficient. So it's very much about business to business. It's about about selling to corporates rather than to the consumer. And that is our view is to avoid volatility that can give rise from consumer business, particularly as you go through economic cycles. Next slide, please. ESG is increasingly important in the investment world. We at Albion have always believed that investing in businesses with positive societal and environmental impact is very important, and those that have been investors for many years will have seen our investments in areas such as education, renewable energy, and what the focus on the ESG does is it allows us to more formally set processes around. So, for example, we were for VCs, we were an early signatory in the UN PRI, and we're looking at how we can better invest in businesses with environmental and societal impact, but also looking at how we can improve the ESG credentials of those businesses in which we invest over time. So if we move to the next slide, you'll see that ESG is now incorporated in a more formal way. I'd always argued it was very much part of our investment approach, but it's now more formally incorporated. And that's from how we choose the investments to look at. But importantly, now when we due diligence, we ask companies to fill out ESG questionnaires. And that's really to help us understand, that the businesses do meet our ESG objectives, but also to understand where they are in their ESG journey. How can we help them with their ESG strategy, such that when we come to sell those businesses, they are going to very much fulfill the requirements that we are seeing from the increasingly sophisticated buyers, particularly large technology companies. And we work with those businesses throughout our holding period in terms of supporting them with resources to build their ESG capability. But in terms of a good example is running ESG seminars, but very much as part of our process when we look to invest further monies into companies, we very much link that into ESG targets, as well as looking to monitor how the portfolio as a whole is meeting the requirements of ESG. Next slide, please. So Albion itself is doing its part. So we're looking at reducing our carbon footprint. We've been doing a lot on our charitable activities particularly over lockdown and thereafter. And we're delighted to be supporting two fantastic charities, WizKids, which provides equipment for disabled children who wouldn't otherwise be able to access it. And then also Generating Genius, which is very relevant to our current investment strategy, which is enabling and encouraging students from disadvantaged backgrounds to study STEM subjects and go into STEM careers. And then we're raising money to do that, both by our internal activities, and a number of you will have seen that we, Albion, the manager, are encouraging shareholders to receive more of their communications from us electronically. Clearly important to reduce our carbon footprint. And we've been donating £1 for every shareholder who signs up for electronic communications. And I would very much encourage shareholders to sign up. It's the right thing to do from an environmental perspective, but it also means that you get access to information more quickly and more efficiently. It also gives you access to things like fundraising prospectuses because they're instantly available rather than relying on the vagaries of the postal system. So I very much encourage people to move to electronic communications. Next slide, please. Prospects going forward. I think COVID is less of a feature in terms of our lists of things to think about. I think our core focus is building up the innovative portfolio of technology companies, and that is around reinvesting cash proceeds into those areas, whilst maintaining our exposure to renewable energy, which, as I highlight here, are going to be delivering steady income rather than seeing significant capital uplift. And similarly, I would suggest that our schools are probably going to see slower growth in the immediate aftermath of COVID, but in the mid to long term offer excellent capital upside as they fill. We are starting to think about fundraising this year. We have had to reduce the size of the fund as a result of the disposal of the care homes, and it's worth noting that the HMRC test requirements did require us to pay out those dividends as well. So we will be looking to build up those funds as we think about our fundraising plans for this year. And the current thinking, whilst no decision has been made and no quantum has been established, would be that we would be looking to fundraise, launching in very early in January 2022. Next slide, please. Quick warning about fraud. I'm afraid fraud doesn't go away. Online fraud in particular. This isn't unique to Albion and its funds. It's endemic. Hence our investment focus on the whole area of digital security. We are frustrated by shareholders being approached using very historic shareholder data information. These will often be what are known as boiler room scams. It will be a caller pretending to be from a corporate finance house, for example, and saying that there's been a very large offer for your shares, and on receipt of X pounds, NDA will be produced. Please ignore them. Put the phone down. Let us know that you've had it. We will never phone you with that sort of information. We would be passing that sort of information to you through the normal shareholder RNS regulatory announcement service, and through mediums such as today's AGM and indeed our annual reports. So please be on our guard. It's very upsetting when we hear shareholders who've been duped, and they are just so credible. But just always remember, take time before doing anything, and please contact us if we can be of assistance. Next slide, please. And that brings me to the end of my presentation. So I'm very pleased to be able to present to so many of you, albeit not physically. Hopefully this has been useful. I'll be now handing back to Richard, who is going to compare the Q&As.
Thank you very much, Will. So as you say, we will now start the Q&A session. We have had some questions received from shareholders before the meeting, and some are coming in now as we speak. So we'll attempt to answer as many of those as we can. But all of the relevant questions and the answers related to them are going to be posted on the Albion website as soon as we can after the meeting. So taking a first question that we had submitted previously, that asked whether the board could give their views on the case both for and against merging the fund with another one in the Albion group. Well, as Will mentioned, this is a matter of considerable discussion with the board. We had our own strategic review in the earlier part of this year when clearly the outcome of the care home sale was known. And we looked very hard at this question, and clearly there are benefits, which you can imagine, of economies of scale, reduction in directors' fees, and a larger VCT with a more diversified portfolio, which arguably would spread the portfolio risk across a broader range of businesses. The other side of the coin was that it was clear to the board that the costs associated with merging are going up all the time, stamp duty, legal fees, so on. And actually these significantly outweigh what we felt to be the benefits. And the payback period could take a very considerable amount of time. Added to that, looking around the rest of the Albion stable, other Albion funds themselves are not cash constrained. There'll be many people on this call, on this AGM, who are shareholders in other Albion funds. You will know that. And you'll also know that Albion Venture Capital Trust is not necessarily involved in a number of Albion's top growth investments. And so there would be a question of a merger which would result in a major dilution potentially for other funds. So all of those taken into consideration, the board's view was that actually we should stay as we are and concentrate on growing the fund back, which is very much what Will has been referring to, which is why the pipeline is so important. We had another question submitted in advance, which is about the number of employees in each of the companies. I think, Will, you've probably dealt with that in your presentation, have you?
Yes, indeed. That's covered in the presentation.
Good. We have a question coming in about, assuming there are no further COVID-related lockdowns in the future, are you intending to hold next year's AGM as a live or hybrid event rather than another entirely virtual online format? Are you also intending to hold an annual shareholder event for all Albion VCT shareholders later this year? And will this be a live event if regulations allow? There have been a couple of questions coming through about that. There was even somebody who wanted to know about how much wine or what sort of wine would be available at these occasions. Will, can I give you that one?
Absolutely. Well, as you know, Richard, wine at these events is very important. I'm going to start by talking about the knowns rather than the unknowns. So what we are doing is we are putting our head above the parapet, and we are holding a face-to-face shareholder event this year on the 12th of November. That being said, we are clearly dependent on what happens over the coming weeks with regard to COVID, the virus, but also the regulations that may come in place. But all things being equal, we would love to have a face-to-face event. We really I know both the boards and we at Albion really value that face-to-face contact, the ability to have those informal and formal chats with our shareholders, get a feel for their areas of interest and inquiry. So that is going ahead. Venue is being finalised at the moment. The exact format's being finalised, but it will be physical. There will be food, and there most certainly will be wine. So if you could put 12th of November, we hope to have a reasonable capacity, but it probably won't be quite the level of capacity we've had in previous years. So save the date, keep an eye open for that, and there'll be more to hear. Turning to AGMs, it's an interesting one, and I don't have a definitive answer as to what our strategy is going to be next year, because we are very much looking at how they can be done. What are the options in terms of online versus hybrid? What we do know is that online AGMs have been very successful. They've been successful because they're relatively short in time frame and therefore lend themselves well to people joining remotely. And we've seen lots of shareholders who we previously haven't had at AGMs. And the other, because we now post them online, so they're all available through our website, we get a lot of people accessing the presentations subsequently. So it's an interesting one as to the way we take that forward. It's also going to be interesting to see how the sort of technology and market practice evolves. So more from that in the future. But in the short term, those that would like to see us face to face, 12th of November is the opportunity.
Very good, thank you, Will. And in fact, there has been a comment from a shareholder, just as a statement, really. I really appreciate the online AGM, as I wouldn't be able to attend a physical event. Please continue to do them, even if you have a physical presentation in the future. So I think the reach that this is giving us is significant and very helpful. We have a question in here. There's a couple which I might link up, actually. One which says, do you think there'll be a need to pay another special dividend at the end of the year in order to comply with VCT rules? Or do you think it's likely that you'll find enough good investment opportunities to deploy excess cash? And what I might link with that is a separate question. Can you explain more about the need for fundraising when we have a lot of cash and a higher bias towards the newest investments than other Albion VCTs? Will, would you like to take those two together?
Yes, absolutely. So we just sort of, the issue around existing cash is linked to the HMRC rules, which basically says that we have to have invested proceeds from a sale within 12 months. That doesn't give us a lot of time when you have the very substantial exit. This is it's a feature of the rules. Now the question is, where will we be at the end of the year in terms of investing the cash that we've got? and that's a feature of the level of follow-on and new investments we make. But one way or the other, we either had to have invested that money to bring the HMRC tests into line, or if we haven't done that, that would give rise to a special dividend. So both any potential special dividend and that will be a decision the board will make based on the facts available later in the year. It directly also links to whether or not this fund would be and what level this fund might raise money. Core part of this strategic review was the need to build the fund over the time. So it's going to be a balance between investment activity, pipeline of investments, and cash holding relative to the HMRC requirements. But in terms of pipeline, there's a lot going on. We've now got quite an exciting portfolio emerging within this fund. There are a number of businesses within it that are making good progress. And a feature of the type of investing this fund now does is that there is a need to support these companies over successive funding rounds. So effectively, we can see a cash requirement for good reasons, because these businesses are doing well, that naturally evolves as the investment strategy to support technology businesses. Alongside that, we have a very active origination activities going on, and a well-resourced and substantial team identifying and then investing in these opportunities. We are in a space where entrepreneurs are very focused. So software, technology, healthcare are very much where the action is, if you like. We've got a well-resourced team now. We've got an increasingly well-respected brand in the market. So I am confident that we've got the capability and to deploy money. But as all these things always are, it's a number of moving parts. It'll become clearer over the balance of the year. So I'm not ruling out anything at this stage. It'll be about seeing where we are when the board report back to the shareholders later in the year.
Thank you, Will. Shareholders will appreciate that the whole discussion of pipeline and assessment of the pipeline features very significantly in all of our debates and discussions. We have a question here about where investments are split between various VCTs. And the question is, who or what board makes the decision to buy or sell, and the percentage distribution? Will?
Okay, so there's a few parts to that question. First of all, the decision to buy or sell is the decision of Albion Capital as the investment manager. So we are the discretionary fund manager. And that is taken on, as a rational investment decision as to whether the benefits of selling outweigh the risks of holding. So that's the sort of the rationale and how we go about whether to buy or sell. And importantly, the VCTs by definition have to act as a single unit in that respect, because we are co-invested under a single bid. So if one VCT share sells, they all sell. In terms of how investments are allocated at the point of investment, that is strictly regulated by a formal allocation agreement that is in place between the 6 VCTs Albion manage, all who have common investment strategies, and indeed Albion as the investment manager. And the core of how that works is you look at the level of cash that the various VCTs are holding, and then the investment is allocated in line with cash holdings. So the more cash you have, the larger investment you have. So consequently, this fund has had very high allocations to recent investments, and one would expect to going forward. There are some complexities around follow-on fundings. It's not linked purely to cash. It's either linked to preemption rights, or if we are investing beyond the sort of legal preemption rights of the funds, then you fall back to the traditional allocation. So it's all carefully governed by an allocation agreement that's been in place and has been refined over the years to make it appropriate for the type of investing we now do.
Thank you. Got a couple of questions here about renewables and a comment that renewables are still a significant part of our portfolio and wanting to know what our plans are. Are we long-term holders? And a more specific one, given the VCT's ESG investment principles, can the manager reassure her shareholders that we intend to hold the renewable energy investments for the foreseeable future?
Great. Yeah, so as a result of selling the care homes, the renewables are a decent chunk of the portfolio, but really importantly, that will come down over time. The strategy is very much to build up the portfolio into innovative and growing businesses. In terms of our sort of thoughts around renewables, I said in my presentation, the opportunity is an income opportunity rather than capital. They do generate a good yield. We know shareholders like them. We absolutely get the ESG point, and generating renewable energy is a core very useful feature to the overall Albion ESG strategy. So in terms of the answer to your question, there's no current intention to sell the renewable portfolio. They're great from an ESG perspective, but they also generate a steady income, and that's income that can help offset the costs of running the fund.
Very good. Thank you, Will. We are more or less finished with questions, so perhaps appropriately, the last one is about the sunset clause. Is the board concerned about the sunset clause in 2025? I think this is one which clearly applies to all VCTs in Albion. Will, so would you like to pick that one up?
Yes, sure. So the sunset clause was put into the VCT scheme when it last went through state aid approval. That's European Commission. And what that said was, it said, well, if you are going to have a scheme where investors get tax breaks, then there needs to be a defined period of time, not a finite period of time, but a defined period of time, and that was 2025. Clearly, lots has happened since then, not least of which Brexit, leaving the European Union, and the whole review of the state aid rules and how they're going to operate in the UK that's currently going on. What is core to this, in my mind, is what will happen. The sunset clause applies very specifically to the ability to give upfront tax relief. So that's the 30% tax relief when you invest. And the way we look at it is, and indeed when we're engaging with Treasury on this point, is that it's very important that we have demonstrated that both Albion's VCTs and the industry more generally are very much fulfilling the objectives that Treasury have set us, and that is about growth of innovation, creation of those businesses that employ people, and the evidence for that is very strong, and the engagement with Treasury is significant. We are currently working through alongside and through the VCTA, the BVCA, the AIC, all the various trade bodies, and we're in the early stages of a very constructive discussion with Treasury as to what happens next. But I'm optimistic given the significant contribution of VCTs and actually the really important role we can provide in helping the economy claw its way back after the pandemic.
Very good. Well, thank you, Will, and thank everybody for the questions that you've submitted, but Will in particular for your very comprehensive and lucid answers. So I'm now going to proceed to the formal business of the AGM. The notice convening the meeting has been in your hands for the statutory period, so I'll take the notice as read. There haven't been any questions from shareholders on the AGM resolutions, and so I'll proceed. For this AGM only, only shareholders at the place of the meeting can vote, and therefore John and Richard and I, we're all shareholders and are at the place of the meeting, are allowed to vote. Therefore, you'll shortly see that the proxy votes we've received show that the majority of shareholders have voted in favour of the board's proposed resolutions, I don't intend to read out the proxy votes after every resolution, but they will be shown on screen as each of the resolution comes up. So the first resolution on the agenda is to receive and adopt the company's accounts for the year ended 31st of March, together with the strategic report and the reports of the directors and the auditor. Those in favour? Thank you. I declare the resolution carried. Resolution 2 is to approve the directors' remuneration report for the year ended 31st of March 2021. Those in favour? Thank you. I declare the resolution carried. For the next resolution, I'll pass the chair to my board colleague, John Carr.
Thank you, Richard. Resolution 3 is the election of Richard Glover as a director of the company, and I have pleasure in proposing Richard for election. Those in favour? I declare the resolution carried. Richard, back to you.
Thank you, John. Resolution 4 is the re-election of John Carr as a director of the company, and I have pleasure in proposing John for re-election. Those in favour? Thank you. I declare the resolution carried. Resolution 5 is the re-election of Anne Beresford as a director of the company, and I have pleasure in proposing Anne for re-election. Those in favour? Thank you. I declare the resolution carried. Resolution 6 is the re-election of Richard Wilson as a director of the company, and I have pleasure in proposing Richard for re-election. Those in favour? Thank you. I declare the resolution carried. Resolution 7 is the reappointment of BDO LLP as the auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which accounts are to be laid. Those in favour? Thank you. I declare the resolution carried. Resolution 8 is to authorise the directors to agree the auditor's remuneration. Those in favour? Thank you. I declare the resolution carried. Resolution 9 is to allow the directors to allot shares. Those in favour? Thank you. I declare the resolution carried. Resolution 10 is a special resolution that allows the directors to be empowered to disapply preemption rights. Those in favour? Thank you. I declare the resolution carried. The penultimate resolution, also being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Thank you. I declare the resolution carried. The final resolution, which is also being proposed as a special resolution, is to allow the cancellation of share premium and capital redemption reserve. Those in favour? Thank you. I declare the resolution carried. So thank you all. That concludes the formal business of the agenda. I would like to thank all shareholders who joined the live streaming of the AGM. The board really welcomes any feedback you have, which you can do by sending an email to aavcchair@Albion Capital. And for those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly on the Albion Capital website. I hope you were able to watch the entire presentation without connection issues. However, if you would like to watch a recording of the event, a link to the video will shortly be available on the Albion Capital website, alongside the manager's presentation and the formal business of the AGM. So that concludes the business of this year's AGM. I now, with my thanks to everyone, conclude this meeting, and on behalf of all the board, say that I hope everyone stays safe and well. Thank you very much.